Hi everybody, this is Alan Ellman, the Blue Collar Investor, welcoming you to our Beginner's Corner information series on selling cash secured puts. Today we're going to go through Lesson 8, which is a step-by-step process for mastering the put selling strategy. In other words, what we're going to do is we're going to put everything all together into one video, everything that we went through in Lessons 1 through 7. So first of all, congratulations for making it through the first 7 lessons. And here we go now, putting everything together with Lesson 8. So if you think back to the beginning of the series, the very first step is to develop a watch list of elite performing stocks, those stocks that we were willing to sell our puts on. Now, it's important that we remember that these stocks may in fact be put to us. The option holder may exercise that put and opt to sell those stocks to us. So they should be stocks that we would otherwise want to own. So what we do is we put our securities through a very rigorous 3-step process. First of all, fundamental analysis, sales and earnings. And some of the screens that we talked about were from the Investors Business Daily, the IBD 50, the IBD Smart Select screen, the Scouter ratings or risk reward if those are available, and a free site, finviz.com, are all good resources for locating stocks that are very strong fundamentally. Now, once we have a list of stocks that have met our fundamental criteria, we next have a look at the price chart. And here that's called technical analysis. And in the BCI methodology, we use 4 indicators. We use moving averages to identify trend, the MACD histogram to identify both trend and momentum, the stochastic oscillator, which identifies momentum, and we confirm everything by using volume, which also allows us to look at divergences. So it's important that we all become proficient at reading a price chart. It's not that difficult, and it won't take that long. That's the second screen. The final screen are common sense principles like avoiding earnings reports, minimum trading volume, and appropriate diversification. When the smoke clears, we should have a watch list of about 40 to 60 stocks that are great performers in all 3 categories and stocks that we would otherwise want to own. Now here's a look at the screening process that the BCI team does for our premium members. That top blue bar shows all the different screens that I alluded to before, fundamental, technical, and common sense. After screening these stocks, we then form our watch list, which we call the running list on the right side of the page, because that list is in a constant state of change. We update both our stock and exchange traded fund reports for our premium members on a weekly basis. Has a lot of information in it. Let me just highlight one for you. You could see on the top right there that some of the stocks are highlighted in yellow rows. Those are the ones that have passed all the screens except they have upcoming earnings reports that particular contract month before expiration. So our members know that they can't use those stocks until after the report passes. Of course, you could see generally that there's a lot of information in these reports as well. Now, once we have our watch list, we then need to select an option, and we have to make sure that the option meets our monthly goal. In my case, I like initial returns between 2 to 4% in normal market conditions. So here's a sample options chain for Coors. You could see at the time Coors was trading at 81.64, so we had a look at the out-of-the-money $80 strike price, which generated a bid of $2.20, and the 85 in the money strike price, which generated a bid of $4.70. So this information is gleaned from any options chain. Now, once we have that information, we could feed it right into a put calculator. And at the time that I'm creating this video, we're going to be adding a basic put calculator as part of the free resources link on the bluecollarinvestor.com website. So in this example here, in the blue cells at the top, you simply feed in the information gleaned from the options chain, and then at the bottom, those cells become populated, and it will give you both exercised and unexercised returns. Now we also have to make sure that we put an equivalent amount of cash into each of our positions. We don't want any one position to dominate our portfolio. This is part of the common sense principles that I alluded to before. Now, once we've decided on which stock and option combination we're going to use, we then have to execute the trade. And I have recommended we use online discount brokers because we're going to be doing a lot of trading with this strategy, and we want those commissions to become a non-event. So make sure you have a very reliable online discount broker. We do have a file located in that free resources link that I mentioned before of several online discount brokers that you may want to consider. So you enter the information on the online discount broker site, execute the trade, and then your position will be entered. Now, we're not done yet, because once that position is entered, we then go into management mode. We have to keep an eye on our trades. It won't take a long time once we get good at this, but we have to keep an eye out. We have to look at our portfolios at least once a day for a couple of minutes. And there are certain situations that will create exit strategy opportunities that will help us either mitigate losses, turn losses into gains, or enhance gains to even higher levels. This is what's going to distinguish you from all other covered call writers, is knowing how to manage your positions. And some circumstances that would require exit strategy execution would be if the price of the stock declines by more than 3% from the strike price, or if the price of the stock accelerates exponentially. You may want to roll your option at expiration to avoid exercise. You have to be careful, though, of earnings reports if you do that, because you don't want to move your position into the next month if there's an earnings report due out that month. Considerations include time remaining until expiration, because certain exit strategies are appropriate in the first half of the contract, others are most appropriate as the contract is about to expire. And once again, all exit strategies start with the very same thing. You buy back the original option that was sold, and that will eliminate the option obligation. Now, just to review, a lot of free information can be found at our website, thebluecollarinvestor.com. Don't forget to type in THE first. Look at the top black bar of the web pages. It'll say free resources. Click on that, put your email address in, and you're in for calculators and files and a lot of free information that I hope will help you build your returns up to the highest possible levels. You can also email me directly at Alan, A-L-A-N, at thebluecollarinvestor.com. You can also visit our Blue Collar store, where you have all the books that I've written, the DVD programs we've created, and a lot more. And that includes my fifth book, Selling Cash Secured Puts, which came out at the very end of 2014. You may want to consider our premium membership. That will save you a lot of time. We'll do the screening for you. We produce for our members a brand new watch list of stocks and ETFs, exchange traded funds. So 2 reports every week. We update that information for you. Just go to the membership link on our website. Once again, contact information for me, Alan, at thebluecollarinvestor.com. And our website is thebluecollarinvestor.com. So there you have it, Lesson 8. We made it. Thank you so much for watching this series. I hope very much that you enjoyed it, and more importantly, I hope that you ultimately will benefit from it. As always, this is Alan Ellman, the Blue Collar Investor, thanking you. Take care, everybody.